Hi, I'm Erin from BC Global Investments, and today we're going to talk about cash flow. So probably the most frequently asked question that I get is, will this property cash flow, or how do I know if this property is going to make me any money? So when you're considering whether or not to add a property to your portfolio, it's important that this property is actually an asset, right? And we know that by definition, an asset is something that produces income. So how do you know just by looking at a property or looking at a listing that it's going to produce income? Well, you have to run the numbers. That's the only way to do it. I don't care how experienced you are. I don't care how many times you've done this, what your neighbor says about the market, or just how hot that market is. You have to run the numbers for that specific property every single time, okay? No shortcuts here. You have to do your due diligence. You have to do your homework. You have to ask the right questions, okay? So before you can even do that, you need to know what questions you need answered, right? You got to know what to ask. So the first thing that you're going to do when you're doing a cash flow analysis is gather all the income on the property. So for a single family home, it's probably just going to be the rent, right? The monthly rent that your tenant is paying. If you're looking at an apartment complex or something that might have like a coin operated laundry machine or storage units on site that your tenants might rent, those are all income producing assets. So that would go into your total income. But in this scenario, we're just going to do a single family home. So we're just going to assume monthly rent. So we're going to start with monthly rent of $1,000. So we'll put that right here at the top. Monthly rent, $1,000. We're also going to consider that there's going to be some vacancies, and every market has vacancies. If somebody tells you that a unit or a property is 100% occupied all the time, I will put money on the fact that they're probably lying. So make sure you know what the vacancies are in your market, and that's what you're going to consider next. So we're going to consider a 10% vacancy in this scenario. So that's 10% of that $1,000 is 100. So we're going to take away $100 each month to, over time, consider for this vacancy. So now our total income is $900. So the next thing that we're going to look at are our expenses. And here is where you need to make sure that you are dotting every I, crossing every T, and looking at every single potential expense that you're going to have as that landlord. So the first thing that we're going to look at, your insurance. In this situation, we're going to assume that insurance is $35. Then you're going to have property tax. If you're using an agent, just ask them to look up the tax record. They can tell you exactly what the property tax is. If you're not, just Google it. You'll find out exactly what the property tax is. If you can't find it that way, you can also call the town. They'll give you that. You can get that. You can pull tax records from there as well. So in this scenario, taxes are $50. We're going to assume 10% set aside every month for repairs and maintenance. So 10% of $1,000 is $100. We're also going to assume on this property that you're going to have to cover lawn care. So we'll put $50 aside to cut the grass every month. Next thing we got to figure out, are you, the landlord, going to be responsible for any utilities? Electric, gas, water, whatever. Make sure you ask all those questions. Make sure you know exactly what these other market rents are based on. You know, if the market rent is $1,000, but all the other landlords are already paying for trash, water, and electric, that's going to change your numbers. So make sure that you know exactly what utilities you are responsible for. In this case, we're just going to say tenants are paying all the utilities, you're going to pay for the trash. So we'll put $15 here per month for trash. Another thing you want to look at is there an HOA? Because that can sometimes be a pretty hefty fee every month. So that needs to be included in there too. We're not going to use that for this scenario. Lastly, we're going to look at management, which is typically 10% of monthly rent. So again, 10% of $1,000 is $100. So now you have all these expenses. We haven't included one thing, the mortgage payment if you have one. So your principal and interest. In this case, we're just going to go with a nice round number of $400. So you're going to add all of these expenses up, and you're going to total. So this here totals $350 plus another $400. So you're looking at $750 total expenses, right? And you knew from your above calculations that your income is $900. So now that you have all that figured out, all you're going to do is take your income and subtract out your expenses. So in this case, $900 minus $750 leaves you with $150. So that's the green, that's in the green, right? So that's good. Your property is going to cash flow. Even after you pay all your expenses, even after you pay your manager, even after you pay all the fees, any utilities, and your mortgage payment. So you're putting cash back into your pocket every single month. And oh, by the way, your tenant is also paying your principal and interest payments. And you're also, this property is going to appreciate on average 3% every year, just like all property on the face of this earth. So keep that in mind. It's more than, when you're analyzing property, it's more than just about cash flow. There's 4 ways that you can get paid in real estate. That's cash flow, appreciation, amortization, which is that mortgage payment, that mortgage pay down. And then the last one is tax benefits. There's lots of things that lots of credits landlords can take advantage of in terms of taxes. So keep that in mind. But the purpose of this video is just to show you how to analyze a property for cash flow. So we've done that. Hopefully you learned something. I look forward to hearing from you.